Hello, this is a TradeSite trade recap. I wanted to talk a little bit today about the power of the TradeSite Seeker tool, which we talk about a lot. It's a very important tool for timing the market on multiple time frames. It's something that we use everywhere from the 1-minute chart all the way up to the weekly chart of the markets, along with its companion tool, the Comer. And the tool has two different segments or components, if you will. I'm going to walk you through that on the stock symbol for Twitter. And I'm going to actually start at the beginning of the year because there's a very good reason that we're going to make use of this tool over the course of the year. The longer the signal takes to play out and the more movement you get in one direction on the stock, the more meaningful the signal can be when you actually get it. So what we're going to look at first here, this is basically January of 2016, and this particular point in the chart, what you can see is that Twitter's hanging around the $22 level. That's where it was to start the year. I'm going to move this forward day by day, and what you're going to see play out here, in this case, let's focus on the green numbers. Not the red ones because those are about to get erased, but I want to show you the green numbers as they go along here because we have to get a very specific count from 1 to 9 in the green numbers in order to get the beginning of the tool. So just because you make a 1, 2, 3, 4 like you see here doesn't mean that the tool's given us any information yet. You have to make it in a row, 9 candles in a row, using the counting criteria that we use for the tool, which is a 4-bar look back and comparing the close of the current candle to 4 bars back. And you need to get all the way to 9. So I'm just going to show you how this plays out. So 6, 7, 8, and now 9. And once you get to 9 on the green numbers, okay, you'll notice all the red numbers that were there erased. That's because every time you get to a new 9 count in one direction, the red numbers are going to start from that point forward. So we got a signal, basically what we call a startup phase completion. That means that we've established enough of a downward move. In this case, it can work to the upside obviously as well, but enough of a downward move that we've established the 9-bar startup phase, which means all the good stuff can potentially happen after this. And if you don't get all the way to the next target signal, then that's fine. You saw the red numbers get erased a moment ago. Well, here we're going to see one actually play out. So let's keep going. And again, now that we're starting the second phase, which is the actual exhaustion signal, what we're going to see is that these don't have to be consecutive. We're going to go 1 through 13, hopefully, and there's a couple of little variations along the way, but let's just take a look at what happens. So far we've got 1. I'm going to widen the chart out here a little bit so that you can see it. So far we got 1. Now there's 2, there's 3. So we are working towards the 13. Now when you get to 13, that is your exhaustion signal. That means, okay, the stock is exhausted from both a time and price mechanism to the downside, and we'd be looking for a move back up to the upside after that. So here it goes. Now they don't have to be consecutive. So as you can see here, there's 1, 2, 3. There's 4 finally, but it was several days later. Here's 5 right here. I'm sorry, I was wrong. There's no 5 yet. There's your 5. So they do not have to be consecutive. Okay, it's very important to understand. Now, what happens along the way is that once we get candle 8, and that's right there, one of the side rules of the tool is that the 13, in this case, because it's a downward move, separate from our current counting criteria, the 13 also has to be lower than the 8, and that is so that you don't get too high of an exhaustion signal. You don't want to have a signal where the stock moves back up and then comes back down and you're actually getting the signal way before it's actually exhausted. And so from this point forward, we're going to keep going. Look at the new count. No count. There's a 10 finally. So we've got 9 and 10 in place. And you can see the minute we started to head down, we got a 10 done. And then we move up a little bit more here, and now we start to roll. There's your 11. There's your 12. Okay, so we're ready. At some point after this, we can get the 13 exhaustion signal on Twitter, and we're already into March at this point in time. Now, you see that asterisk? See what happens there on that candle? The reason there's an asterisk is that because that particular bar met the criteria to give us the 13, but as I said, we're not below candle 8 yet, so that is not the actual final exhaustion. We have to meet the count criteria and be below bar 8 in order to get the 13 exhaustion. So let's just keep checking. There's another asterisk. There's another asterisk. Notice that, again, the problem is we're getting, in theory, the exhaustion signal, but we're not below candle 8. And that makes sense, right? We wouldn't want to be getting an exhaustion signal here when we've actually been lower than this multiple times over the 2 months or so that this is playing out. So we keep going, nothing going on here. Still some more asterisks. That just means we're meeting the criteria. But again, we need to be below the 8 before that's going to happen. I'm just going to move through here very quickly at this point in time. I'm going to slide the chart back up so we can see it better. There we go. And there's your 13. There it is in May. So it took all the way from the beginning of January to the beginning of May to actually get the 13 exhaustion signal. So what that suggests is that the bottom could be in place on Twitter. Now, again, in this one, are we much lower than we were back 3 months ago? No, we haven't made a big move down. So is the stock exhausted to the point where it's going to immediately turn up and bounce? Maybe not, but let's just see how it plays out. So here's the tool, and you also get, by the way, you see that pink line that's drawing below that. That's what we call the risk line. So if you were to go long Twitter here on the 13 signal, that pink line is what you'd want to watch as a stop loss. In other words, if it goes below that line, we're going to get out. So now we start to tick back up. Nothing major yet. Back down. We're still where we are. May into June now. All right, we're starting to move back up. At this point, I think it's pretty clear. I mean, we got the signal back around 14, and the stock's made its way back up to 17. So, I mean, it's working, right? It's doing something for us, which is exactly what it's supposed to do. There's a new 9-bar startup phase completed to the upside. Okay, so now maybe we're on our way, as we move up here, to getting the exhaustion signal from the move up, which would give us potentially a top. We'll see. So let's keep going. Let's see how this plays out as we head into July. Look at this. The red count is moving, but now, in this case, we got another green startup phase. So that erases the red count. It's going to start over. That's fine. No problem. So at this point, the stock's gone from the $14 buy signal to the $18 level, right? And still in play. Here we go again. Are we going to get another one? Now we've got both the red count going, and we're trying to move. Okay, a little bit of bad news on Twitter. Gaps down. Is that the end of the world? Not really. We're into August. It comes back up and fills that gap. So we're still operating under the exhaustion signal, the 13 buy signal from back at the beginning of May. All right, here's another new green startup phase, 1 through 9 completed. So again, the red numbers are going to start to paint again. There they are. All right, and by the way, there's a green line up top. That's the static trend line from our original 9-bar move down back in January. So that's usually a trade to target when you've got a 13 buy signal in place. So just keep that in mind. All right, some back and forth action here. And remember, the fascinating thing about this tool is that you can put this on a 5-minute chart and it could play out over the course of a day or two on a 5-minute time frame just as well as it'll play out over the course of a bigger time frame like the daily chart. Well, here we are, some positive news or rumors. The stock gaps up. This is late in September as the rumors start to hit that potentially Twitter's a buyout candidate, right? So now that we've got that move, all right, there's candle 8. Right, so we're moving along towards some exhaustion. We're up to that green line. We're now at $23 off of the buy signal that was back at 14. Okay, there's candle 9 and 10. A little bit of a pause here as we pull back. There's candle 11. Are we getting close, folks? Are we getting close to some sort of exhaustion? There's candle 12. This is yesterday. So right now, as I'm recording this, we're on Thursday, October 6th. So this candle that you see right here, this is Wednesday, the 5th of October. And this is when we posted out on Twitter to everybody. And ironically, on Twitter, that Twitter had a 13 exhaustion signal to the upside. And as you can see here, there it is, the move up yesterday, closing near $25. That's your ultimate sell signal on Twitter. So what happened coming into today? What does Twitter do the very next day after that signal? Let's take a look. Remember, there's rumors circulating that Twitter's a potential buyout candidate. Everybody's buying the stock on news and rumor potential. Maybe it's Disney, maybe it's whoever. But the technicals say sell. The technicals say sell. We could see it coming yesterday, very late in the day. It was clear that signal was going to be given. And here's what we've got so far today. A big gap down and pushed lower on Twitter over 5 points. So we had the buy signal that wasn't so exhausted because it took so long to play out, but still gave us the curling bottom point back in May. And then here, a bigger move up, especially those last few days, jumping from $18 all the way up to $25 in a matter of less than 2 weeks. That's some real extension. And then when you get the 13 exhaustion off of that, you really jump the other way and gap down, and the signal gave you both the high and low over the course of the year so far on Twitter. I think it's remarkable. This is how we trade. If you want further information about this, you can contact us at tradesite.com. We do offer a trial to our services. We can help answer any questions. Have a great trading week.